Bitcoin's one of these weird assets where 80% of all holders just hoard it. Like you and I, we just don't do anything with it. We just hold it. And so there's really only 20% that's available for trading.
Well, I mean, speak for yourself. I stare at my Bitcoin once every 5 seconds, just so you know, okay? I've slowed it down from once every 2.5 seconds. But go ahead. Keep going. You're doing beautifully.
So that mechanism is driving the valuation up of Bitcoin over time. Now, it also means that people start to see this asset going up because there's less supply and lots of demand, and it joins more and more people. Because this asset is the best performing asset in all recorded human history. Bitcoin itself has done 20 million % since 2012. It has produced 150% annualized returns since 2012. Ethereum has done, which is another cryptocurrency, about 170%, and Solana 190% or 200%. So this asset is by far and away the greatest performing asset in all of humanity. And that gets people's attention, obviously, when people's returns have been low and people can't get out of the wealth trap. They can't afford their houses.
Raoul, I'm old. I'm an old person. This seems like a new thing. I'm old. Why, Jamie Dimon tells me that this is a decentralized pet rock or a Ponzi scheme. So go ahead. Honestly, if you saw the viewer feedback for your presentation, it was off the chart. But when I look granularly at what we're doing at Speak Up, I have a lot of people that are listening demographically that do not get it. And I've written a book about it. I try to go out on the speaking circuit and evangelize about it. And I still feel like there's a lip in a cup spread before I can get people over the hump. And I want you to help me. I want you to explain it in a way where a rock hits somebody in the head and they have to go out tomorrow and get off of zero. They have to not be zero exposure to Bitcoin.
Okay. The real reason, forget all of the complexity of what this is and the technology. Forget all of that. Enjoy this clip? Well, come and join me on The Journeyman, my YouTube channel. Subscribe there for more of this as soon as it comes out. I'll see you there. Think of why most people have bought gold. It's to protect themselves from the action of central banks. It has proven itself over several thousand years to be a way of having a store of value. Bitcoin is that for a digital age. Okay, most people know that story. They don't understand the other side of the story. Is why does nobody feel as wealthy as they thought they should be? Particularly if you're a bit older, you're like, why are my savings not as much as I thought they would be, or I can't afford as much? Right, that's the big conundrum. And the fact is that particularly since 2008, when we broke the world because of debt, we have been using the printing of money to try to paper over the cracks, because economic growth from an aging population is slower. We don't have much productivity because people are retiring, and we've got too much debt, so people have to service the debt. So the central banks have been doing a bit of magic, which is printing of money. At one point, it was called quantitative easing. Now they don't do that as much anymore because everyone knows that game, because that's the money printer go burr. So what they do is they inject liquidity into the system, whether through all these weird things you hear about, like reverse repo market, stuff like that. Basically, it's to hide the printing of money, put it into the system. When you look at that on a globalized level, because everybody's doing it, you're debasing the level of fiat currency. And what that means is your dollar today buys you less assets tomorrow. Now, why do we buy assets? We buy assets to save money for future consumption. So if I were to buy gold today, it's because I want to release it in future and I want its purchasing power protected for it to go up. Now, when you look at what's happening with the debasement of currency, they're debasing currency by about 8% on year on average amongst all the global central banks. Add in about 3 to 4% global inflation, You have 12% hurdle rate on your assets before you actually make any money. So your savings, you need to be making 12%. Now, since 2012, the S&P 500 has made 12% annualized. The NASDAQ has made about 24% annualized. So tech stocks have helped. But crypto is the one that really offsets this and allows you to generate a lot of wealth. So if you're in your 50s like me, or your 60s, and you're thinking, I just don't know if my retirement savings are enough, then a small allocation to an asset that does 150% a year will compound massively and will help you in having purchasing power in your retirement, because nobody wants to be broke when they're 85 years old. That's everybody's biggest fear.
Okay, so that is brilliant. And I want to say something to you. That is exactly what people need to hear. And Pompliano said something this week, which I'll repeat on this show. And I did his analysis. Since 2000 January, the US dollar has lost 22% of its purchasing power. That's been the impact of inflation.